Good afternoon, guys. It's about 4 o'clock on Monday, December 11th. Hope everybody is doing well. All three markets trended up today, starting with the NASDAQ up about 28 points, 0.2%. Still trying hard to get off of this range. The double top. This is the previous range that was in July. It's trying to edge up. I think it will. It's just slowly doing this. Maybe it'll tomorrow, but I think it will cross and go over the resistance line that it seems to have hit over here. Nasdaq was pretty strong, I think driven obviously by a lot of the big tech stocks. The S&P 500 also up roughly about 18 points, 0.4%, much better, and actually is over. Look at that. It's highs. So that's a good sign. If you look at the all-time highs, just to show you a little bit of context. So this thing is moving up and to the right very beautifully. Really, really good move. Cup and handle pattern, and now off to the races. So this is a good move on the S&P 500 index. And then finally, the Dow Jones was also up. Excuse me, up almost about 160 points, 0.4%. Both of them stronger than the NASDAQ, but Dow seemed to be a little bit off of the tops again. It's still trying its best to get over the resistance that it still has. This one needs a little bit more time, I think. That's multi-year resistance, whereas the NASDAQ has hit is resistance from July itself. This is a very nice flag pattern on top of a cup and handle. So this is a good sign. One of the stocks that showed up on our radar is Doordash. DASH is the ticker symbol for the company. Let's do our 5-step analysis, figure out what works, what doesn't work, why is it trending up, whether we should be looking at the stock. Okay, starting with the annualized statements. I always start with strong fundamentals, as you guys probably know. Okay, so let's start with the income statement. $290 million, 2018. 5 years later, oh wow, 6.5 billion. So let's say this is 300 million for sake of argument. It's close to 300 million, and this is 6.5 billion. This thing has gone over 20 times. This is phenomenal. This is 200% growth, 200% growth, 69% growth, obviously slowing. This is half. This was due to COVID. This is just amazing amount of growth. And then this year, it's on track again to do the 20-something% range, 28, 29%, close to 30, but less than 30. 8.1 billion, that's the next 12 months kind of a forecast. Gross profit in the 2.6 billion, that's roughly about 40%, 30-something, 38 to 40% range, not bad. Essentially, they're a delivery company, not a software company, so you're not going to expect 80% gross margins. And then net margins are negative 3 to 5%. Oh, this is high, but they're trending in the right direction, hopefully. No, this is actually very, very high. They're not even trending in the right direction. Look at this. It's 200 and 600 halved, and then suddenly, boom, this was not so good. Last year was not so good. Let's keep looking at the quarterly, see what's changed on a quarterly basis. Okay, revenue growing from 30% range, increased to almost 40% range, and then slowing back down to under 30% range in the last quarter. The most previous quarter was 27% growth, which is good for a company doing this much in revenue. That's good growth. Excuse me. Some reason, something to have gone the wrong side. Okay, gross profit still in the 40% range, and then net margins in the 3 to 5% negative range. So it's going down. This is a good sign. This was a bad year for them. 2022 was a difficult year. And then this year, they seem to be on a much better trajectory, reducing their losses, going into the right direction. I like this. Let's go to the balance sheet. Roughly about 10 billion in assets in Q3 in the last quarter. Current assets about half of that, 5 billion. And then net debt is very small, 500 million. So very manageable. Sorry. Okay, let's look at valuations just to get a better sense. For a 40% margin, 4 is not bad. 4.8, a 40% margin plus a growth rate of about roughly about 28, 30%. This is a decent valuation. Probably one of the better stocks in terms of valuation. Okay, growth margins 40%, net margins negative 3 to 5%, not bad at all. On a scale of 1 to 10, we'd give the fundamentals about a 6 or 7. So position size was about 10%. I wouldn't go 20%. Okay, let's look at the monthly first. Oh, the monthly chart is very nice. Coming off of a very strong base that it has built. What does that mean? Started out very strong, went all the way up, This was a rise, and then took a stage 4 breakdown, consolidation stage 1, accumulation stage 1, markup stage 2, distribution stage 3, markdown stage 4. This stage 4 went all the way to here. And then look at this nice bottom that is built from here all the way to here. Beautiful bottom. It's built a very nice base. Usually what this means is insiders and also most likely institutionals are slowly accumulating the stock. It hasn't done anything other than just build a strong base. And now it is out of a critical range. This is the critical range for it from the last time it hit the base. Obviously, 82, 87 is a big range. And then the next big hit for it, now it's already in the 106 range. The next big hit for it is going to be probably somewhere in this range, somewhere in the 118 to 130 range. See there? So that's for the monthly. It's gotten out of a very key resistance point is what I'm taking for the monthly. And it seems to be on this is stage 1, accumulation, markup, stage 2. Okay, let's go to the weekly chart. Okay, you can see this a little bit more clearly here, and maybe we can make the bottom a little bit more smarter around it. If you put it around here, then you would continue to think that it's still in a little bit of an accumulation phase in some senses, but this is a key point. So let's draw that key resistance area, which is 131. Even before that, it's probably going to find a little bit of resistance in this 108 zone, which is coming up, but there's a good support for it in the 87, 90 zone. So it's got good support and resistances over here right now. Don't see anything dramatically challenging. Oh yeah, I do see a very nice bull flag pattern. Look at that. On the weekly, this is a nice flag. Good, nice candle, probably during the earnings week. And then up and to the right. This is a nice, beautiful flag. I like that. There is resistance going to be happening for it at the 107 range. There's going to be resistance for happening in the 115 range. So just keep that in mind. It could just go a little bit higher and then just head down in some senses. But let's look at the daily chart and see what that tells us a little bit more. Actually, the resistances are from more than a year ago. So this is hitting close to its 52-week highs. 103, it's 52-week high, 103.98. This is getting close to the 52-week high for the last 1 year. This is moving in the absolute right direction. This is heading higher, guys. At least for the short term, this is heading very much in the right direction. So I would probably be very interested in Keen. Should have taken a little bit position up a little bit earlier on, but that's okay. Could have done it, but you want to make sure that you find out what happens after earnings. After earnings, this was a good dip. This is the down flag, the bear flag after you move up. And then this is a right kind of a move in the channel. So this is going at 101, easily to 107, probably close to 115 range. That's roughly about a 10%, 15% move. And based on how the stock trades, look at the personality of the stock and find what happens to it. Look at that, good, nice moves, and then consolidation. Good, nice moves, consolidation. So this is one of those very extended kind of periods of time where it moved from here. So on the year as well, Dash has done very, very well. It's performed very well for the year. I like the stock, but I think that the resistance for it, this is already a candle that's not superb, but given that today it's probably going to move a little bit lower would be my sense. I'd like to buy it in the 90 to 99 range, then wait for a move to 107, 115. Thank you very much for watching this video. Please comment on the video. Let me know what you think. If you hold Dash, if you think that Uber or Instacart are better stocks than Doordash, I like this. I think it's going in the right direction. Thank you very much for watching.